Welcome to TMS Insights. It's February, which means reporting season, which means we're all very busy here at TMS, and we're just taking a bit of time out to bring you some of the news from many of the results that have come out. We'll jump straight into it, Ben, because we've got a lot to cover and we've got to get to everybody's many stocks and see how the disparate performances followed with reporting. Let's go through a few of them. Computershare, Ben.
Yeah.
Really, we talked about this about a year ago. Been watching it. It's delivering.
Yeah, it is. And so that's despite the sort of the flattening out in rates. But this company, I think, has had its third profit upgrade in as many reports. And they seem to have really good momentum at the moment. It's a global business. And Link's another one in this area, which I also thought had quite a good result. They've got some short-term challenges, but it looks quite interesting.
Both look interesting in that area.
Over the next few years, definitely. Yeah.
Bit of growth there, which is good to see.
Yep.
In the healthcare area, CSL.
Yep.
Very good result again. I mean, you can't help but love this business.
Yep.
Sometimes the share price runs a bit ahead of it and it sells down, and they're in a little bit of a story of this reporting season. But CSL pulled back after the result, but we're really happy with it.
Absolutely. I mean, I think the thing here was that the market was sort of expecting an upgrade, didn't get it. They did say we're tracking at the top end of our guidance. There virtually was not one blemish in this. They did have an issue getting one of their key products into China for a few weeks, which probably actually prevented an upgrade. But there's still an incredible R&D pipeline there, and I think it's still got to be the blue chip share that you want to own in the market.
Yep, and a very good period of product development for them. So,
absolutely, yeah.
Cochlear, just to segue for a bit there, that one, a good result. That share price has come back a fair bit since that one. Not one that we're widely owning, but it's an interesting stock.
Absolutely. So they've run into there is this sort of product cycle where you get Advanced Bionics, I think it is their major competitor, will come out with an updated piece of hardware. Sales go up strong there, and they're one which is going to leapfrog that. Will have a softer period. They reaffirmed earnings guidance for the full year, so it wasn't a downgrade or anything, but it's been quite a significant share price pullback.
Yeah.
So that might start to look interesting at some stage.
Could be, yeah. One that pulled back a lot after, a disappointing set of numbers was Blackmores. Obviously, the China story not coming off in the way we were led to believe it might. So looking a bit challenged for growth in the short term.
Definitely. So these guys... I would say a bit of a change in the language in terms of the optimism about China. They also seem to have been caught out by the Chinese very rapidly starting to buy their product from Australian pharmacies and get it shipped to China rather than buying it in country in China. And the challenge for a company like Blackmores with that is that the inventory that they expected to sell in China is caught in China, and they then have to discount the pricing over there to move that inventory on. Which leads to lower margins, which also leads to pressures back in Australia. So overall, it was a disappointing set of numbers, and I guess that's one we've probably got on review at the moment.
Yeah, I think that's got to be on review. So talk to us about that one. One that's on review probably on the other way, Ben, Altium, outstanding.
Yeah, I think this was definitely one of the best results we've seen so far. There's been a few companies who have really blown the doors off, but few and far between, I've got to say. But this was a company that continues to exceed everyone's even heightened expectations. And, the CEO, when you hear him present, is really, it's hard to hang up the phone and not feel like you still want to be a part of that business. So it looks very expensive, I'd say, at the moment. It could easily come back quite reasonably in price in coming weeks or months.
Yep.
But, if you don't own it, it's probably one to keep in the back of your mind.
Good
and
stock
I'm sort
to keep a look
sticking
at.
with it at the moment.
Yeah. Another one that's done phenomenally well is Magellan. And we have spoken about that a fair bit in these calls. So, just how well, they've done given the growth they've had for a decade now. There's more upside for Magellan. Yeah,
and also how poorly their competitors are going.
Yes.
You look at a number of the big fund managers here, it's all going backwards. So, Magellan up to $76 billion in fund now. It's just extraordinary. Hamish Douglas, again, is just so upbeat and focused on growth and how do we keep growing this business. And, I think it's one of the things we talk about a lot in the office is finding businesses where you've got someone who's heavily invested in that business and is looking 10 years ahead and not about, earning some bonuses over the next couple of years. And Magellan's actually gone X a 75-cent fully franked dividend, and
Plus the special.
still $33.
Yeah, exactly.
So it's amazing.
Pretty amazing, isn't it? So great story from them. We had a quarterly update from Macquarie Bank, which is going well. Obviously, it rode through the Royal Commission well, but the business is going particularly well.
Unbelievably well. Yeah. I think the interesting thing with this for me was Macquarie at these operational briefings are very often a bit conservative, get expectations down, and then the results are historically stronger than expected. With this one, it was quite bullish. It was for Macquarie, it was unusually upbeat about where they're seeing things headed. So it's going to be.
We do have a new CEO, so the language will change.
Yep.
Shamira at the wheel.
What's her last name?
Long name. Aristocrat gave its AGM.
Yep.
And that's been a well-performed stock over a long period of time. But share price-wise, it's really consolidated over the last year.
It has. And, this is one where we're seeing consistent earnings upgrades in the market, 34% earnings growth in the last half. They are pumping a lot of their excess profit back into the business at the moment. So that's led to slightly lower revenue growth hitting their bottom line. But the update at the AGM today has been positive. They basically said we're on track for where we're hoping to be. They have guided that investment back into the business will continue, and we're seeing a lot of growth businesses doing this at the moment. But sort of reasons to stick there.
Yeah, good one. Origin, a very good result. It's been a solid business that's turned around, paid down a lot of debt during the difficult times, recommenced dividends. So good story from Origin.
Yeah, I think so. And a rebounding oil price as well, obviously, which is a big driver. And look, I think Origin is coming out of a difficult period, as you often see, as a much better quality business. And we've seen that with BHP and Rio when they decided to cut their dividends and focus on paying down debt and getting their costs down. Origin in another 5 years, it'll probably almost be a good thing that they went through that period. But the issue they still have is the government is all over these guys in terms of the retail side of their businesses.
Yeah, sure.
And that's a bit unclear.
Yes, definitely. Regulatory factors playing the part. Now, REA Group reported a really good set of numbers, Ben, for the period ended December, but did say January it got more difficult. We know that with an adjusting property market, listing volumes can wane somewhat. Better data out about auction clearance rates on the weekend. That period may have passed.
Yeah, look, I think this is just an extraordinary business where you can grow your profit 20% in one of the toughest housing markets we've seen in some time in Melbourne and Sydney. And what they said on the call was that we have a state election in March in New South Wales. We've got a federal election in May. People typically don't like to list their properties around elections. So they basically guided, this 6 months is not going to be easy. But looking out, there should be some catch up. So the markets, I think, look through that negative short-term outlook at the longer term. And as you said, the auction clearance rate in Sydney has been over 60% 2 weeks running now. So and quite reasonable volume. So if that keeps improving or even just holds where it is, we might be through the worst of it.
And the number 2 player in that space, Domain, impressed the market, which was doubtful about its numbers too. So that's looking healthy.
Absolutely.
Woodside's numbers were very good. That's had a ripper of a year, Ben.
Yep. And again, the strength in oil price is a big thing for this business, but a number of their big projects they've been investing billions of dollars for years are coming online. The balance sheet's in good shape, so they seem to be coming out of this a lot better.
Woolworths, we're a little disappointed with Woolworths' numbers there. They seem not to have top-line growth of any magnitude, and again, a bit of cost savings delivering a bit of EBIT growth. But disappointing, I guess, Ben, after a good run-up for Woolworths.
Yeah, I think so. We definitely thought better bottom-line growth than we saw, and a lot of money still being pumped into the business, and I think that's the bit of the question mark at the moment. Yeah,
CapEx very high, so Brad Banducci very defensive about that.
Yeah.
Wesfarmers, of course, it's now the substantial part of Coles. It retains a stake. Coles independently reported soft numbers.
Yeah.
But Wesfarmers reported today some very good news. And again, a bit of a trend here, Ben, a nice big fully franked special dividend alongside their interim.
Yep, and companies getting these franking credits through to their shareholders while they can still utilise them in many cases. And, I thought it was a very solid result from Wessy's. So it's going to be $1 interim, $1 special. So that's about $2,
Fully
40
franked, yeah.
in including the franking
Yeah,
credits,
yeah.
and sorry, $2.70. So that's a pretty big income hit. And we've
Yeah.
seen Fortescue's announced a special, and
Cube, there was a couple of,
yep,
it's a small
1
one, but,
cent.
but there's been a few definitely coming out, which is a bit of a theme this reporting season. Our last stock to mention is WiseTech,
Yep.
which has been an outstanding stock, beautiful company in many ways, but again, very high multiples, Ben,
Yeah.
and couldn't impress the market to want to pay off. It actually sold off
Yep.
quite heavily after the result.
Absolutely. And you know, again, as with Altium, not one for the faint-hearted, trades on a very high PE at the current price, but has the potential to be a truly global leading business. But it's a long way off, and the share price is going to be volatile, but they're consistently moving to that goal. And, you know, these tech businesses can be amazing businesses if they become the leading global business in a specialised area, which this one is in logistics. So we'll see how that continues. I think definitely a hold, but wouldn't be rushing to buy more at the moment.
Okay, and lastly, some personal news. Great news for director Aaron McMurray here and his lovely partner Mads, who's had a baby, Harry, little baby boy.
Prince
Very
Harry.
First Prince Harry. Very exciting. Lucky he looks like his mother, and we're all very pleased for Aaron and Mads and Harry. So that's
Great news.
Great news. Well, that's all we've got time for in this Insights. We're going to have another one later in reporting season, and we look forward to bringing that very soon.